The current bullish natural gas sentiment for the upcoming winter, largely fueled by expectations of rising LNG exports, could quickly shift to bearish after a major development at the end of this week. Venture Global's defeat in a major arbitration case with BP marks a serious blow to the US LNG sector, exposing the risks behind its rapid expansion. The International Chamber of Commerce ruled that the $30 billion producer breached supply obligations by failing to declare commercial operations at its Calcasieu Pass facility on time. The delay, more than 3 years between startup in 2022 and first contractual cargo in April 2025, allowed the firm to benefit from surging spot prices following Russia-Ukraine conflict. BP is seeking over $1 billion in damages plus costs, while Venture Global insists the gap reflected normal commissioning delays. Shares tumbled 19% after the decision, and further losses could force contract terminations or debt repayment pressure. This sent strong bearish pressure through the gas market at week's end. While the case specifically concerns Venture Global, it has wider implications for the US LNG sector, where concerns are mounting over the economic viability of new Gulf Coast projects. Shell CEO Wael Sawan recently told an event in New York that he was surprised by the number of final investment decisions being taken, describing some projects as not economically fully rational. He added that investors and developers must carefully judge when to add capacity, hinting that the pace of U.S. expansion may already be overextended. Such remarks could cool enthusiasm among banks, investors, and potential off-takers evaluating new projects. Confidence has already been shaken by disputes over contract reliability and the risk of an approaching supply glut. Analysts warn that the global LNG market is heading toward a substantial oversupply by the late 2020s. More than 300 billion cubic meters per year of new export capacity is expected to come online between 2025 and 2030, about half of it in the United States, representing the largest wave of additions in industry history. That projection excludes Russia's 27 BCM Arctic LNG 2 project, which has recently begun exporting cargoes to China despite ongoing U.S. sanctions. Current global LNG production stands near 550 BCM. Venture Global's output alone is projected to rise from 54 BCM today to 93 BCM by 2027, driven by its Calcasieu Pass, Plaquemines, and CP2 projects, making it the largest U.S. exporter. However, its legal troubles have undermined confidence in U.S. LNG as a dependable supply source at a time when Washington seeks to leverage the industry as a strategic trade tool. At the same time, LNG demand is expected to grow at a much slower pace, which could result in global LNG supply exceeding demand by as much as 200 BCM by 2030. This structural imbalance is likely to exert significant downward pressure on natural gas prices, potentially starting as early as 2026, as markets adjust to an oversupplied environment. Don't forget to like, drop a comment, and check out the previous video to help support the channel. See you in the next one.